Hey, welcome to the Closing Beat, everybody. How we doing here today? Hope you're having a great day so far. This is a quick show that we do. We call it the Closing Beat. We're financial advisors here at Jazz Wealth, and yeah, we're just going to go over the stock market, the good, the bad, and the ugly for the day. I don't have a lot to go over today because it was one of those kind of quiet days, but we'll dive into it, of course, and help you out. We're also playing a game. It's called Guess the Dow. We'll announce our winner tomorrow. Of course, every week there's a winner. If you're the closest without going over, guess where the Dow will close next week. And if you can guess close enough, you win a $100 gift card. If you're one of our customers, we'll actually credit your account $100 if you'd like, or you can take the gift card. Either way there. So let's talk about the stock market here and get this thing going. You got the Dow lower by 52 points on the day. The S&P was flat, basically perfectly flat for the day after being up decently here this morning. Finished the day even. The NASDAQ added 5 on the day. We had some econ numbers come out today. You had existing home sales was better than expected, 5.49 million versus the 5.36 expected. This sort of follows up with our housing permits and housing starts yesterday. They were really good. We talked about that yesterday in the show here with the multifamily really standing out as something important there. But you know, also you can't really downplay single family. It was did very well there. We also had jobless claims today. Small uptick there. I wonder, let's try something here. We're going to just kind of play around with this a little bit today since we got a little extra time. Jobless claims numbers came out. It's a weekly number. Small uptick. We got to 208,000. And if I go like this, you can play along. So here's the uptick, 208,000 week over week. We're at lows here. Let me zoom out. I'll go out 10 years just so you can see how jobless claims are just at like historic lows here. We'll actually go as far back as we can, all the way to the 70s, and you can see we've almost never been lower than this. And the gray area behind there is actually the recession, so you can see how jobless claims sort of respond into recessions, if you care about that sort of thing. And we're just sitting near lows, so a very minor little uptick. It's good economic news today as far as that goes. So looking good there in jobless claims. Trade talks are going on, right? Some sort of low-level talks. The in-person meetings really wasn't anything good. We didn't hear anything good. We got a tweet out of China that they're in no hurry to make a deal. Sort of feels like they just sent their like B-team negotiators here to kind of just say, hey, shake hands, have a glass of wine or something. The real big talks start next month. So the market really didn't have anything to grab onto, which is a shame because we've been talking about the stock market really needing a catalyst to sort of move to highs, and it just doesn't have that. So in the meantime, we're just sitting here at highs. You got the S&P 500. Really stuck right at that line. I just drew the line where the highs are just so we could see. A little bit back and forth there as we're just waiting for some sort of information. NASDAQ also trending sideways here over the last week. The Dow just basically floating near those highs as well. So not really a whole lot to go on. Sector-wise, really quiet today. A lot of, we call it ho-hum sort of day where some were up about 0.5%, some were down about 0.5%, but nothing really exciting. Some of the standouts today would be gold miners, GDX adding about 2% on the day. Price of gold was actually a little bit lower on the day. But gold miners did well. Oil finally getting a little bounce after that pullback from the strikes earlier in the week. So settling into a new zone here, starting to get comfortable with these prices. You could see that today. Everybody's already responded to the news, bought it, sold it, whatever they wanted to do. And today is sort of like nothing new coming out. Now, tomorrow we got Baker Hughes rig counts coming out. Sometimes that has an effect on oil. But for right now, things like that, USO, your commodity ETFs, here's DBC if you want to take a look at it. You know, just sort of quiet. Small little bounces, small little losses, depending on the ETF that you're looking at. Healthcare stands out here, just continuing to break out over this little downtrend, very slowly and methodically, I would add. Nothing exciting really there, but nice to see a strong day on that one, on a day where really, you know, it could have been anything, right? The markets really didn't do much. It had a chance to stand out or to look really weak, so not too bad. Utilities hit new highs. There you go. Utilities really strong. 100% of the utility stocks are above their 50-day moving average, if that helps you there. And that's largely because of bonds. You got yields heading a little bit lower again. You can kind of see that with the price of bonds here. Although it wasn't perfect, we'll look at, let's use the TLT so you can play along if you want. Started a little bit higher on the day, meaning yields started lower and they started to creep up throughout the day. So a little minor little bit extra volatility than we're used to seeing just intraday there. So a little pressure to the downside, but still positive on the day. REITs, we talked about those Well, we haven't talked about those yet. REITs also did well today. Small gain, just nothing that you're going to like look at and go, oh my God, I missed out on something. But REITs, same thing there. Every stock in the REIT category there, 100% over the 50-day moving average. So looking good there. On the downside, really not a whole lot. It's going to be some of those oil and energy names that are still pulling back. XOP being the one performing the worst, down 2%, sort of settling into its new price range there. OIH is the oil service stocks. Look, it looks like it's a bigger move than it really was because not much else moved today. On a normal day, these stocks wouldn't have been near the bottom of the list. You got the regional banking stocks taking a break. I don't know. There's not really a whole lot in here. Transport's still pulling back a little bit. Retail, this is like every day this week that retail's pulled back. So that one's looking a little bit weak. But, there's just sector-wise, normally we kind of dig into these things here. I would say overall we've kind of come into this period of settling. Right? So everything has been rocked one way or the other, either because of the Fed announcement or because of oil or whatever's happened. And now today was kind of like a settling period. Just not a whole lot really, not really a whole lot to go on there. So let's cover a few stocks here while we're going through this. There we go. We'll put this little guy back up here. All right, so Facebook, I thought this was kind of interesting, kind of in a little bit of a range here, but the range is tightening. So if you like this sort of thing or you own Facebook, you go, okay, it hasn't done a whole lot, really, no matter where you bought or sold. You're not really excited or scared at this point, but it keeps hitting this series of highs here, and it seems like it's trying to break out above those highs. Now, as it's pulled back the last few times, it hasn't had a lot of strength to the downside. So there hasn't been a lot of sellers there. It looks like this is trying to poke above those highs. So I think if you own Facebook, you're sort of optimistic to see what happens going forward here. Of course, any news or anything could sort of take care of that, but we'll see what happens. Microsoft, that's in the news today, making new 52-week highs. That was really the major support for the markets today as far as the biggest company out there. Gapped out of its little range. We sort of touched on this yesterday. $40 billion share buyback, not an existing. Not that they're like, okay, we're upping it to $40 billion. This is brand new. So a brand new $40 billion buyback. It's not as big as it really seems if you look at the market cap of Microsoft, but still $40 billion. That'll grab headlines. They also raised their dividend by 5 cents, comes out to $2.04 a year starting next year. And so Microsoft getting a little bit of a pop on that news. And really, it was sort of the strength for the day. That was where you went to look if you wanted to find something strong to play. Costco, a little bit lower on the day, 1.5%. Still very much a strong stock, but it was downgraded today by Bernstein Research, group of analysts out there. They basically had a whole bunch of fancy things to say, and the key words there were membership exhaustion. Membership exhaustion. That was a fancy way of saying they think memberships have reached a peak with the economy starting to get a little bit weaker. They think that could be a weak spot for them going forward. They said memberships are the first to suffer during economic downturns. People don't need a membership to Costco, so they tend to cut those things out. Or if they have to renew, they just choose not to. I don't have any stats on that one, actually, but what I got from this was they were essentially trying to give a hint about the overall economy. So if they think that's going to suffer and they downgraded the stock, then don't they kind of think the economy is going to be weak as well, per their own wording, really? So that's that. They got a $230 price target. $230, by the way. Did you see the price on Costco? It's at $287 today. They think all the way down here for Costco in the next 12 months. So that essentially says they're picturing the economy weakening by, well, that much over the next 12 months. The average right now for analysts is 293.69. So still a little bit of bullishness there for those analysts. The best analysts on Costco is from RBC. He's 75% successful with a 17% average gain. He's got a 321 price target on it. So he thinks there's still some room to go. That was just like 14 or 15 days ago that he had that rating. So there's Costco. If you own Costco, there you go. You got a little bit to think about tonight. Darden Restaurants, DRI is a ticker symbol. That was down a little bit today. Slower sales growth. Now think about this. If you just pay attention every day, and this is sort of a show you like watching, awesome. If not, you're probably not watching, but retail sales numbers came out. We spent like a good 2 minutes going, hey, did you notice bars and restaurants, people aren't spending as much there? That was the leader for the longest time, meaning the best performing subcategory of the retail sales numbers. And so we made a big deal out of trying to point that out. And so you have your restaurants, you got your not bar stocks, but your bars/restaurant stocks seeing a little weakness there, at least a little bit. Well, Darden Restaurants came out and confirmed that. They said we've got slower sales growth across the board. Olive Garden slowing down a little bit there. Doesn't matter how much pasta and bread we can sell. They sort of agreed with that. They've got the same thing going on. So these econ numbers are not glamorous. They're not exciting. But, hey, when you get a chance to point them out, it gives you a little heads up. You got to start thinking ahead like, well, if that's slowing down, what's that going to hurt? So just pointing that out. All right, Target. So Target, $5 billion share buyback. They're raising their dividend as well. Target's a little different here. I want to point this out for a second. So Target pays a consistent dividend. In fact, they've raised the dividend every year since 1990. So if you like dividend-paying stocks, I mean, it's not like going to be the best out of all of them. But here's a company that consistently raises their dividends. You got to go back to 1980. Every single year they raise their dividend, but they do it cautiously. They don't go trying to over-impress with everything. They just slowly raise that dividend a little bit. If you look over the last 5 years at Target and how they've raised their dividend, the dividend's up essentially 7%, right? It's not a 7% yield. It's that they've raised it by 7% over the last 5 years. If you look at the S&P retail sector, the average is actually 11%. That doesn't mean Target's bad. Clearly, it's doing really well. You know, they're obviously doing well as a company. It just shows that they're a little bit more cautious with their dough. While all the other companies go and try to give you as much dividend as possible to grab your attention, Target, they're showing growth, right? They're still doing well. They're growing. The stock's doing well. They had an awesome earnings report this last quarter. And so they're very cautious to raise their dividend. Just want to point that out. So those of you that dig a little bit deeper into the news that you see today, you'll know, okay, it's nice, but it's not like super duper amazing. It's just a nice, steady dividend paying company there. So hope that helps. All right, what else do we have here? Twilio. Twilio, one of the growth software as a service stocks here. Coming up, there you go. It's pulled back recently. Remember, a lot of these growth stocks, especially the software as a service, they have pulled back a little bit. And Morgan Stanley says, you know what? That pullback that you've seen in these growth stocks / the service stocks in the software space, that pullback is actually buyable. Morgan Stanley said that pullback here in Twilio is now it's a buying opportunity. They have a price target. They raised it. It was at 130. They now boosted up to 135. So they're optimistic on Twilio. If you're not familiar with what they do, I'm learning little bits day by day. They pretty much just dominate everything. And also they bought SendGrid, right? So they bought SendGrid like $2 billion or something like that. So Twilio continuing to kind of make their way through the space and doing it well, right? Good growth over there as well. All right, let's move on here. You got 71% of the S&P still above the 50-day moving average. We lost 1% overnight there. REITs and utilities, 100% of the stocks are over the 50-day moving average. Financials now at 85%, right? That's been creeping up. That's been one of those sort of undervalued areas we've been pushing for you. Energy is no longer the weakest area. Actually, it's healthcare and communication services with 55 and 56% respectively, if you care to break down the S&P into individual sectors. You have 23 new 52-week highs today. We'll go over there and take a little look here. You got 23 new 52-week highs. AIG was one of them. You could very clearly see people playing the breakout in AIG. We mentioned this over the last 2 days, just as ran up into the highs, looked like a breakout candidate, did break out, and you could see by the boost that it got today, higher volume. You could see technical traders saw the same thing. It's not that they're watching the show or that somehow I put like $10 million on the line or something. It's just technical traders saw the same thing that we did. So it's kind of a cool study. Whatever happens going forward happens, but it's kind of a cool study to see where people will make decisions. And should you make those decisions there at the same time and you want to participate in that or not? All right, Dr. Horton here. This is DHI. It's a home builder. So DHI hit new 52-week highs as well. This one's starting to prove itself as being one of the stronger names in the group. And I'm going to bounce back here. If I could go to, I'm going to find a better way to do this. I put up Dr. Horton. It's Dr. Horton. I call it that. They put this up here over the last year so you can see it's starting to separate itself from the home builders. We're not comparing it to the S&P. We're comparing it to this little sector here, the home builders. So overall, DHR doing well, starting to outperform if you couldn't see that on the previous chart. And I thought I'd just compare this to some others here. Let's look at KB Homes. So KB Homes now is going to be in the light blue. KB Homes is the outperformer out of the group here. So even though DHR looks good, KB Homes doing well also. You got Lennar Homes at the bottom of the pack. That's your light green line relative to the home builders, not kind of standing up there. You might know more than I do on this about why, but just generally looking at prices there. Lennar being the underperformer so far. And then you go to Pulte Homes and you go, holy cow, okay. You guys are killing it. Old Dr. Horton hitting new 52-week highs, but Pulte Homes looking really good as well. Let's go over to the normal charts here and take a look. And there you go, loaded up. There's Pulte Homes looking good as well. So just wanted to point that one out. Kind of caught my attention. These 52-week highs, 52-week lows, they make you look at things, you know. Causes you to ask questions. Ask questions, you learn. And I thought I'd point out Con Ed. Some of our customers work for Con Ed there, so I thought I'd point that out, that it's doing well also. So good job there. Keep up the good work, Mr. and Mrs. Con Ed employees. On the downside, you just got Altria again, MO at lows, although it looked like a little bit of a washout today. Did you happen to look at that one? It did sort of, let's go back. So it did sort of pull through the 52-week lows today on higher volume, and some of that volume was buying volume. So you can see the light gray line in the background. Now you can't, it's gone. Light gray line in the background showing the volume was higher than average. People looking at that today, you could just see some of those people looking at it thinking, okay, that's far enough. This is a good buy. It's a good discount at this area. I'm not telling you that. I'm just saying you could see it in the charts there. And I'll just pull them up just so I could show you, just so we don't get our lines crossed here, right? There we go. So look at the very bottom. I'll actually try to pull it onto the screen a little bit more for you. See the little tail at the bottom? If you don't know what these candlesticks are, I actually did 3 classes in the dojo. You're welcome to participate and check that out. But look behind it. You got the higher volume. So anytime you have higher volume on the way down and you see pressure on the upside, that not only shows people took their losses, decided to get out, but it shows people wanted to buy that as well. So sorry to spend time on that one, but thought that was interesting. All right, some of our stats here. You got the SMH, technically supposed to be the better performer through this week here. Median gain 1.65% since 1999. It's only at about 0.5% right now, so we've only got one more day to go before this stat will be busted if it doesn't have basically a 1% update tomorrow, which is going to put it back at the highs anyway, so we're asking for some kind of news or something. Not looking good there. Republic Services, we'll wrap this one up. That one hit its goal. So it basically hit it the other day in the very first day, but it wasn't quite there. It got to 1.76, 1.81% was the average. Today did the trick. The highs of the day put it almost 2% higher on the day. So that's that one there. We can scratch that off our list. It has one more day to go, but kind of an interesting one. I just like tracking these things. I'm not saying you buy them or anything. If you'd like another one, we'll try to always keep up with some of these things here. Nielsen. You guys know Nielsen. So Nielsen Group, 66% of the time from this point, it falls 1.16% over the next 5 days. Today is day number 1, so we'll see how it goes. A little weakness today, already down from those highs, so maybe a little selling pressure already starting from people that know those stats, huh? You act like I make this stuff up. Looks like people are already starting to participate. Anyways, that's basically it. Walgreens says they're testing drone delivery services with FedEx. Okay, you imagine that? Pills flying through the sky. They don't sell tobacco anymore, do they? So just the pills flying through the sky, that bag of Doritos you got to have and you're willing to pay $3 for. The tiny bag. All right, interesting. If you follow the Overstock.com stuff going on, really weird. They could probably make a movie out of what's going on there between how he was played by a Russian spy and he's I'm not going to go into it, but he says he sold all of his shares in the company because they pushed him out as CEO. It was about 5 million shares. And so that's why you don't mess around with low volume stocks. See what's happened over the last couple days? What's the volume on that, by the way? 10 million, 12 million. Okay, so that's not all him. That's more pressure there as well. Maybe some of his buddies sold some of it there. What else do we have? AT&T, there's conflicting reports throughout the day that AT&T is looking to sell DirecTV. What else? There was oddly enough, one of our customers asked about a S&P 500 and how they adjust the positions and move out stocks there. And then today, you got CDW taking the place. That's crazy. You got CDW taking the place of Total Systems. They got bought out by somebody. Global Payments or think they got bought out by Global Payments. So anyways, if you're an S&P person, you got to make that adjustment there. CDW taking over, it'll be a couple days still. It'll be the middle of next week before that happens. And you got 3 Fed members speaking tomorrow, so could be an exciting Friday to wrap things up. All right, I'll look and see if I can help answer any of your questions. Otherwise, I'm going to get ready for class tonight. We've got the data. You might be able to tell I'm a little tired, but we got all the data to show the last 20 years, what happens if you bought different times of the week, what happens if you bought on a Monday morning, Monday afternoon, once a month, how does it all compare, when's the most advantageous time. My goal for this class is just to hopefully show a couple small advantages, right? For those of you that are smaller investors, the only answer that anybody ever gives you is put more money away, save more money, stop going to Starbucks and all that great stuff. Somebody needs to give a different answer, right? We can't all just put more money away. So my idea was find ways to show small advantages along the way that add up. So we're going to show those small advantages tonight, giving, of course, all the data. And we went way beyond here because I tell you, to just say, I'm going to invest every Monday morning, that doesn't work because there's holidays, right? There was 9/11, right? There's things that happen to where you couldn't have bought on a Monday. The markets were closed. Or you couldn't have bought on a Friday. There was a stretch of days during 9/11 where you couldn't have bought. There's Thanksgiving, there's stock market holidays and things. So we really dug through all that data to make it that detailed. I don't know why. We probably could have just done it more generally, but I'm sort of particular on that stuff. Cool. Welcome, Timothy, joining us live. Welcome, welcome. Let me scroll back a little bit, see if I can help here. Oh, you guys talking to each other. Perfect. Okay. After earnings, Fed's over, usually we see big pullbacks in the market, so you're loading puts to defend your portfolio. Ooh, got a bear in the house. Well, statistically, you're right. Minus 1.24% over the next month following the earnings. Following a Fed cut. All right. Sorry. Cool. Oh, you got some Microsoft. Enjoying that one? Love it. Biotech. I don't talk about biotechs, man. I just don't. I don't like biotechs. Question, Dustin. What percentage on the downside do you consider average in? Average. I think you're asking what pullback do you consider average? We actually broke it down in a class. We went through each percentage pullback to show how often it happens and when was the last times that it's happened, how many times has it already happened, so that way you would now know like what's average and what stands out as above average. We have not had 10% pullback so far this year, and that is abnormal, right? We should have already had one by now. So to me, if I have to answer that question generally, I would say average would be 10%. And I've even left some of the lines on there just waiting for 10%. I got to adjust them now, actually. You feel like the SPY is propped up for tomorrow's options expiration? Yeah, people get that way. We're right at that 3,000 number there. But let me see here. I just don't know how much volume you'd have baked in there, right? Unless you got the spillover from the Fed meeting stuff. Yeah, you stuck around 300 on the SPY. Yeah, I could buy that argument a little bit. The volume a little bit higher going into today. Yeah, all right. Yeah. I mean, it's a guess, but sure. Would you consider it crazy to be holding on, General Motors? Why, you're asking crazy to hold puts at 40, I'm guessing you're saying? I'm not sure entirely. You might have meant to say 40 puts on that one. If you bought them somewhere ahead of time and you got a nice profit, I'm not sure exactly. The 140 throws me off. How do interest rate decisions of foreign central banks affect the U.S. markets? When they all get together like they did last night, I would have thought it would have had more effect, right? You also had the Fed put another $75 billion into the money market accounts there. The overnight accounts. So I like how that doesn't make headlines. Like, that's a big deal. I pointed that out on Monday or Tuesday. We'll see. Any insights into that Z-scaler after the earnings drop there? Well, you got to look at their earnings. There's kind of like Alta. They didn't come out and say, yeah, this earnings was bad, but all the rest of them are going to be good. And so for that reason, you don't have that extended bounce like you usually see. Alta was the exact same thing, almost the exact same comments and everything, so you could see the performance of Alta. I know they're not related, but you could see the comments there. You think that Disney Plus is priced in? I actually think Disney's playing a game with you where they're underestimating the number of people that they will get over their sort of periods that they've drawn out in their fancy Disney charts. I think they're underestimating because they want a shock to the upside. They're a bright company. They didn't get to where they're at by playing the game, you know, fair and square. So I don't think it's priced in. I think we are pricing in what they've set as expectations, and they're going to do better than that in the long run there. Yep. $36 strike on a what are you talking about? General Motors? I get the 36 strike there. 1.4, you mean no, January? That wouldn't be it. I'm not getting the expiration from you there. If you bought $36 puts and they expire anywhere in the next month or two, yeah, I think you're crazy. Does that help? Any thoughts on loading up those handful of names on your portfolio well diversified? I mean, I can't tell you like what to do. I can say I wouldn't blame anybody for thinking Altria was a discount here, and to look at that and say, look, sizable dividend, sizable company, right? Stable company, just a little bit of a headache here in the short term. Optimistically looking at that as a discount over the last year, down 35%. Just year to date, down almost 20%. So, you know what I mean? I couldn't blame you on that one there. Can't say the same for the others. Mikal, how you doing, man? I haven't seen Mikal around in a while. You've been quietly sitting in the background. I hope all is well up there. Oh, you're holding on to 140 puts. Don't bro me. Yeah, you're crazy. Yep, you're absolutely crazy. Statistically, you are holding a lottery ticket. Best of luck to you. Do you see activity that would show cloud stocks that will make a comeback? Well, Morgan Stanley thinks so. Yeah, so my opinion aside, if you go through and read their upgrade today of Twilio, they included everybody else in the mix there. So they do. They feel, and they have guys that sit around and study this all day and actually get to talk to the owner, the actual management of the company. Yep. Cool. No worries, no worries. You just used language that was a little different than I'm used to seeing when people talk about options. But buying out of the money options like that, sounds like you've really gone for it. I will cheer it lower for you, but yeah, statistically, what do you have? 17% chance of being right? Maybe 20? You could look it up. I don't have it in front of me, but I don't like those odds. You're hoping for bad news, and I hope you know some bad news. Cool. Got some traders on Boeing. Nice. Good stuff there. Higher probability stats to move up or down for statistically lower, right? I mean, September is historically a really bad month. We covered it in our portfolio update for customers. I go through every month and I'll show like what the better months are and a performance and everything. So we nailed that in the dojo, statistically a little bit lower. So so far, you know, we haven't really done anything, really, right? We're just kind of hovering there, a little bit higher on the month, but in the last week or so, kind of just quiet. If you saw a pullback, it's just to me, I wouldn't think anything of it. I think it'd be more than fine there, or at least the start of one. Kind of hoping it would happen by now. Yep. Sweet. Well, I didn't mean to take your time there. I covered everything I wanted to cover. Got a chance to answer some questions. Just checking to make sure everything else is good. Yeah, we're good to go. I appreciate you watching. Hey, our class tonight, we're going to start right at 8 o'clock in the dojo. If you're one of our customers, you should just get an email when I click the button. It'll pull you right into the dojo. The screen will come live. Everything will be sweet. You can ask questions directly in there now. And of course, if you can't make it, yeah, it's always there for you, along with all of our other classes. So you can watch them on demand, if you will. Take that, Netflix. So I know there's football and everything tonight, but if you get a moment, you want to see what the best day is to invest, if you're a weekly investor, or if you're thinking about doing it every month, how does it pan out? What is the difference there? And I'm happy to stay as long as you guys want to answer any questions you may have. So bring your questions and anything that I can help with. I appreciate the rest of you watching, and have a great rest of your day.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.